Welcome back. You're with us on Trading Hour. Time to look at fundamentals. We have Pawan Parakh from Renaissance Investment Managers joining in with some views on what's transpiring in the market. Pawan, thank you for being with us. So, we were just discussing with a technical guest that the market had almost forgotten that days like today also happened, right? But then that's the market. It always comes along with a little reminder. Let's start by talking banks and, what this quarter from HDFC Bank sort of portrays for other private banks, for the sector as a whole. How concerned are you looking at the results? What is your own positioning and what's your takeaway after having heard from HDFC Bank?
Hi, Surabhi. So obviously, after the results talk, the market has given thumbs down to the stock. But I, honestly speaking, as far as I'm concerned, I think for me, HDFC Bank results were broadly in line with estimate because I think we discussed it earlier also, I think, and a lot of these companies, a lot of these banks declared their provisional numbers, and there were hardly any banks which reported deposit growth higher than loan growth, right? So this was very much on expected lines. And at the same time, RBI's concern on CD ratio and things like that, that was also highlighted for last 2-3 months. So in this backdrop, I was actually reconciled with the fact that, perhaps NIMs would be under pressure and maybe in the short term growth could be under pressure. But from our point of view, if you look, say, take a 1-year view, I would want to believe that CASA will not be elephant in the room, interest rates will fall. And this is just some very good attractive time to dibble into some of these large cap names in the banking side.
So you would be a buyer in large cap private sector banks today, including HDFC Bank?
Yeah, very much.
Okay, good. What about the other sectors which look attractive to you at the moment right now? Because from the last time we've spoken, stocks have only rallied.
Right. So I think IT sector is something that we were quite positive. And I must tell you, since that we've discussed banks, IT sector was a similar state maybe about 2 or 3 quarters back. There was a lot of despondency. People were worried about growth and margins and all that. And at that point in time, we actually went overweight on IT sector because we realized that, some of these problems are not structural in nature. These are short to medium term problems. And as you could see, despite the results not being so very great, and perhaps none of the companies have highlighted with high confidence that, say, CY24 will be great, except for some very positive statements from LTTS last evening. But you see the kind of positive reaction that you've seen to IT sector. So I think IT sector now with about 10 with a good visibility of about 10-12% revenue growth for at least say next 2-3 years CAGR and top it up with margin improvement thing. IT sector continues to remain positive. At least we remain positive on IT sector. We just discussed banks. We will dibble into banking names in next 1 or 2 quarters. We're also very positive on this entire power capex theme. We are very positive on some of the auto names, and very importantly, power and auto. The ecosystem is very big. So you've got auto ancillaries, auto financiers. Same is the case with power. You've got power capital goods, industrials. You've got power financiers. So this entire space looks pretty attractive to us. But all of this, I think, one thing that we need to keep in mind is that. Unlike last calendar year, this year your investors' returns expectations should be reasonable, moderate. I don't think this is a year where you'll see another 40-50% kind of a growth. Price appreciation as far as mid cap, small caps are concerned. So all of these topics or key sectors that I've highlighted, I think we should keep in mind that our expectations should be reasonable from current levels.
By the way, now it's a full bear grip on the markets. It's getting quite ugly. The Nifty is down 360 points. The sensex has crashed 1,300 points. We started the show with a 1,000-point fall in the sensex, but the sell-off has only accelerated and picked up in the last 30 minutes. We're staring at a 1,300-point fall. Look at the way the bank Nifty has collapsed today. It's an 1,800-point or a 3.7% decline on the Nifty bank. And it's, HDFC Bank, of course, is, contributing to the lion's share of the fall, 7% gone. But even the other banks like Kotak, ICICI Bank, 3% gone on these heavyweights, and there are hardly any stocks in the green. Look at the advanced decline ratio now.
Yeah, absolutely. I mean, this is the thing about this fall is, Reema, I was just going back in time. In terms of absolute points, this is the biggest decline that we've seen. Definitely the biggest decline since the big year-end party began, right? November is when the markets took flight. In fact, the bank Nifty has now gone back to levels of around the 4th of December. That's when we had a very big green candle. It was a very positive day. And today, if we close at these kind of levels, then we would be going back at that zone at that point in time. So it's banks, and it's not just HDFC Bank, Kotak, ICICI, Axis. This move is really sweeping everybody along with it, even a PSU name like a State Bank of India. So it's just the market has decided to paint all banks with the same brush. That's the kind of risk-off sentiment that we are in today. HCL Tech is the lone ranger in terms of stocks with more than 1% gain. But otherwise, even the other IT names that are trying to sort of show some green here and there, Infosys, TCS, it's not much, about 0.5%, 1%. And that's the thing now, Reema, for the market. I think the market's grappling with the question about direction. You had the huge move on IT when you had the, not as bad as expected third quarter. So 2 fantastic days. But what after that? You've digested that move, right? Are the companies giving you enough ammunition to say, okay, let's completely load up and, it's blue skies ahead? Maybe the market's not so convinced about it right now. And then comes in the disappointment from HDFC Bank. And I think it's just complete risk off, becomes a perfect excuse. By the way, the Hong Kong markets are down 3% today. Hong Kong came out with the GDP numbers. The number was about 5.2%. Frankly, it's not that bad. I mean, the estimate was 5.3%. It came out with 5.2. You can argue that it was a shade below estimates, but it wasn't a disastrous number in terms of Chinese GDP growth. But nonetheless, there's risk off across global markets, risk off across Asian markets, particularly China and Hong Kong. And that is only compounding the problems. And what we have, as you said, is an out-and-out bear grip in the market right now. Pankaj, come in on this and just sort of help us, Pawan, come in on this and help us understand that now that we're getting a day like this, we always complain, right? The market's not falling. Now that investors are getting a day like this, what do you think would make for a good buy? I mean, what are your top themes that you'd go with in the market today?
Right. So I think very clearly, in the backdrop of what happened in last year, a day like this seems like to be a very bad day. But typically, even in bull markets, you've got corrections. I think this is just one bull market correction. I would actually buy companies with very steady earnings profile, cash flow, typical textbook stock selection process. I think that is very important. Over the last 1 year, and I think we've discussed this on our channel earlier also. You've seen a lot of these stocks with not so very great fundamentals, but just great stories have done very well. And this is something, this comes at a real shocker for those kind of stocks and sectors. If we see some sort of a sideways or a sideways movement or some correction in the market for next 2 months, I think what will hold good is companies with growth, cash flows, ROEs. And we are steadfast focused on those names. We are not actually, in fact, in our portfolios, we've actually slowly trimming down some of our small cap exposures also. So it is obviously time to be cautiously optimistic.
Time to be cautiously optimistic, but tone down your expectations for the coming year. Thank you very much, Pawan, for joining in. He's betting on IT, private sector banks, autos, as well as the power capex themes. These are some of the stories that he likes in the markets right now. We will get into a break. We'll come back. And as a part of our special offering, IPO KYC, we get you details on EPAC durables and excerpts from our conversation with the management. Stay tuned.